Hello, my name is Sumaya Sultana and my ID number is GOW2020. Today I am going to discuss about the corporate accounting topic, accounting for income tax. In this topic, I have learned about the taxes and its terms. First of all, taxes is a major concern for most of the organization. The tax are dealt by the Australian accounting standard 112 in the country. Qantas Airline is the third oldest airline in the world. International passengers flights began in May 1935. Now discussing about all its terms. Firstly, accounting profit. These are shown in the income statement of the company. These are prepared as per accounting standard. Accounting profits are prepared after considering revenues from all the sources and then deducting the relevant expenditures of the year. The second one is taxable profits. This is quite different in relation to the accounting profits because these profits are not calculated by the management of the organization but rather prepared by the tax authority operating in the country. Talking about the third one, that is temporary difference. This difference occurs there is a difference between the carrying value of any asset or the obligation of the company which is shown on SOFP and the tax base used for the purpose. Now talking about the fourth one, deductible temporary difference, that is DTD. It is a difference that will be yielding amounts which can be deducted when calculating the taxable profits or taxable losses for the future periods. Therefore, DTD, that is deductible temporary difference, gave rise to deferred tax assets. Now let's discuss about taxable temporary difference, deferred tax assets and deferred tax liabilities. First, in discussing about the taxable temporary difference. The difference which will be yielding the amounts which will be added when calculating the taxable profits or taxable losses for future periods. This taxable temporary difference gives rise to deferred tax liabilities. Next one, that is deferred tax assets, also called DTA. They are known as assets as they are recoverable in the future periods in relation to the deductible differences. Any balance carried forward for the tax losses which are unused. Now the last one is deferred tax liabilities. These are called DTL. They arise due to taxable temporary difference. It is showed in the current liabilities section of the SOFP. They remain unpaid at the year end, therefore they are recorded as current liability and settled in the next accounting cycle. Now let me tell you more about the deductible taxable temporary difference and taxable temporary difference. Deductible temporary difference results in deferred tax assets and leads to lower tax charges in future. Whereas taxable temporary difference results in deferred tax liabilities and leads to higher charge taxes in future. Deductible temporary difference are beneficial for the organization which is subject to tax because they aid in mitigation the overall tax obligation of the organization. Taxable temporary difference are the added burden for organization which also subject to tax because they increase the overall tax obligation for the organization. I have learned more about the deferred tax assets and the deferred tax liabilities. And talking about the tax base of any asset is higher whereas the carrying value is lower, or the tax base of any liability is lower than the carrying value of that liability. And the tax base of any asset is lower in TTD whereas the carrying value is higher, or vice versa for liability. Now let's discuss about the recognition criteria of DTA and DTL. The first thing to consider in DTA is supposed to be taxable profits in future. Future profits period cannot be estimated. Therefore, it should be at least available in certain amount against which DTD can be used. Moreover, in recognition criteria of DTL, same thing is applicable. In case of deferred tax liability, which requires the probability least to be met. Both DTA and DTL should be considered a going concern, and exemptions include the joint ventures, associates, branches and subsidiaries are not recognized. Now let's discuss about the tax expenses of Qantas Airlines. The profit before tax expense for the year 2018 is Australian dollar 1,352 million and Australian dollar 1,265 million for the year 2019. The tax expenses calculated for the year 2018 is Australian dollar 399 million and Australian dollar 374 million for the year 2019. Why income tax is not as per accounting profits? Firstly, the tax expense is based on taxable profits, not accounting profits. Secondly, the tax authorities use different bases because of different treatment for certain expenses. Eventually, income is not as per accounting profit, also because of timing difference. Now let's discuss about the deferred tax assets and deferred tax liabilities. Deferred tax assets is not appearing in balance sheet, whereas deferred tax liabilities is appearing in the balance sheet of the Qantas airline. And this is because of the following terms: plant, property, equipment, and receivables, then payables, then provisions, and income received in advance. Now let's talk about the income tax expenses and income tax payable in Qantas Airline. The income tax expense for the year 2018 is Australian dollar 399 million and for the year 2019 is Australian dollar 374 million as discussed above. Whereas the income tax payable for the year 2018 is Australian dollar 7 million and for 2019 it is Australian dollar 113 million, which is higher than the previous. Now let's discuss about the income tax expense and income tax paid. As we have already discussed about the income tax expense, now we will discuss about the income tax paid. Here, income tax paid for the year 2018 is Australian dollar 3 million and Australian dollar 168 million for the year 2019, which is much higher than the previous year. Now let's discuss about the permanent difference in income tax. As we have already discussed about the temporary difference in income tax in the above lectures. Now, the difference in this we can be discussing about permanent difference is it pertains to only one accounting period and they are permanently exempted for tax purpose. They are not shown in the annual reports. So these are about the accounting for income tax. The income tax expense, the income tax payable and the income tax paid, as well as the permanent difference and all the income tax terms has been clearly explained in this video. Now we just have to review all the things and then we can easily find out what is accounting for income tax. As deferred tax assets and deferred tax liabilities is the major topic which we have already discussed in this video. It is easy to understand what is accounting for income tax through this video. Hence, what I need to conclude is thanks for listening to this video and paying attention to listening this video, as I have mentioned each and everything about what is considered mainly to understand accounting for income tax. Thank you.